There's a lot happening in the local US market right now, especially concerning the job market. There are a lot of layoffs happening in the tech industry. In today's video, I'll be sharing with you how this will impact the real estate market in the short and long term. Let's get started. There's just a lot happening right now, everywhere, globally and locally. I know you're feeling the heat because I'm feeling it. It's just that kind of year. Before we get started and look at what's happening with the job market, I'm going to talk about what's happening around us and how that has impacted us right now and how that is going to impact us going forward. So let's get to the board. Number one, we saw a lot of growth happen in the last 2 years. You heard me talk about this in my last video. We saw tremendous growth in small companies, large companies. All businesses saw a lot of robust growth. And we saw growth on a household basis as well. We saw stimulus checks coming in, people putting a lot of money in the stock market. Stock market just went off the roof. And a lot of companies, what they did is which is natural, we base our growth and our ability to hire and bring on new products and equipment and things of that nature based on what's going to happen in the future. And no one was expecting this market slowdown. Maybe some folks had an idea, but we weren't thinking things were going to slow down this quickly, especially if we saw this crazy growth after 2020. So what happened is a lot of people hired, got equipment, took on loans, and we haven't really seen this yet in the news. We've heard news about large companies firing people because large companies always get to the news first. But there are a lot of small and medium-sized companies, especially startup tech companies, that hired a lot of employees, brought on new products and services, took on a lot of debt, and a lot of those companies may not be as profitable and maybe cash poor. So it's going to be an interesting time to see if news starts to surface now in the next couple of months, if a lot of those small companies start to do layoffs as well, because there are a lot of small companies in this country. I'm not directly correlating this to the dot-com era, but there are some trends here that need to be looked at closely, and just the market needs to be watched for the next couple of months. Number two, we are in a bear market. The stock market has declined. Bear market is defined as a market when it starts to decline 20% or more. I don't know the exact numbers, but we've seen people that had millions of dollars in their portfolios down to $100,000 to $50,000. A lot of people have losses, and the stock market overall has not done well, even though we just saw a recent jump the last couple of days. And then, like I just mentioned in my first point, a lot of companies are in survival mode instead of thriving mode. A lot of companies are cutting costs, laying people off, and just holding off on hiring new people. We are also seeing even households on a personal level holding off spending, saving money, and cutting off any kinds of expenses that they can cut off. This is a good thing. That Feds really want this to happen so they can lower the cost of goods out there and start to bring inflation down. It is sort of scary because we're seeing it happen on a daily, weekly, and monthly basis, but this is a good sign, and the Feds want to see this happening and slow down the economy. Next, we have inflation, which came down a little bit from last month, down to 7.79%. But is this number really the right number? Because this number does not really show us the rents that have increased in this country. When they take this number, when they take into account rents, they do a survey which is based on opinion and not fact. And as you all know, rents have gone up about 50% on average throughout this country. In some markets, maybe 30 to 40%, but 50% on a larger scale. That's a huge jump in rents. So this number may not be real because it's not really taking into account the rent. So inflation may even be a little higher than what they're really stating on their reports. Next, we have rates came down a little bit this week compared to where they were last week. The Feds had raised rates, and this beginning of this week, I'm shooting this on November 18th. So on Monday, we saw the rates come down to the low sixes, whereas they were up in the high sixes and the low sevens. So this is happening because a lot of companies like credit unions or large banks are portfolio lending. they lend their own money and hold that on their books and don't sell it back to Fannie and Freddie Mac. So they're not directly tied to those government sponsored entities and can lend some of their own money. So this is a lot of relief. This is relief and hope for a lot of us that are in the market right now looking for a home, so that you can go out there and secure a mortgage at a lower rate as compared to where the rates were last week or the week prior. Then we have a lot of geopolitical factors happening locally here. When I say locally, nationally in this country, and also globally. Locally, we just saw the midterm elections and the Congress was split pretty evenly. Now that could be good and bad. Good in the sense that maybe some bills will take a long time to pass or longer time to pass, but depends on what the bill is, how it affects us as people in this country. So good and bad, but I think it's a good thing that we are evenly divided. Then you have candidates that announce candidacy for the presidential elections. Donald Trump and Ron DeSantis, I believe is his name, have announced that they will be running for president. So be ready, guys. You're going to see a lot of games out there between parties. A lot of fear is going to be thrown out in the market. This is natural. It happens every time. They're going to play the blame game that inflation has gone higher and we're going to do this to bring it down. So you're going to start to see that. So you definitely want to read, if you are a person that watches news and listens to the media, you want to look at and listen to and read and hear different media channels to make the best and most informed decision for you and your family, because you're going to see a lot of mixed news out there. It's going to be that type of environment. And then we have the proxy war going on, where we have a gun on another man's shoulder pointing at another entity. That's metaphorically speaking of what's happening. It's really a game of egos. Russia is a huge superpower. I'm not going to get too technical here and start talking about ethics and morals, but they are a world power. They have a huge labor force out there. They have a lot of natural resources out there, and really it does not benefit anyone here to have a fight of egos, which it really is, where all of us are getting impacted by that. Oil prices are sky high and they're not going to come down for a while until this war comes to an end or we reach some sort of a negotiation level. So that's also going to impact this inflation number here, because that inflation number, natural resources and energy is a big part, fuel and energy is a big part of that inflation number. So we have to watch the news carefully and pray and hope that this war can eventually come to an end and we can come to some sort of negotiation. I want to take a second to thank you all for watching my content and having confidence in my content. If you're getting value out of this video, please hit that share, like, and don't forget to subscribe, because I love to create this content for you. Thank you for watching. Now let's talk about layoffs. Last week we saw Twitter, Facebook, Apple, and Google. Facebook and Twitter laid off people, and Apple and Google announced that they're going to be holding off on hiring new people. Are going to be cautious with the hiring process. And this week we saw Amazon announced that they're going to be laying off 10,000 people, which is one of their largest layoffs ever. And they're doing this right before the holiday season. Now that can be very alarming for a lot of us to hear that news. And like I mentioned in my point above, there's still some X factors out there. We don't know what's really happening to the small and medium-sized companies. There's not a lot of news about that yet. So that's going to be something that we really want to watch closely. Now let's answer the question. So Amazon is laying off 10,000 people. Now what does that really mean? On a global level, Amazon has about 1.4 million employees. 10,000, is that a factor comparing to how many people they have employed around the globe? Maybe it is, maybe it's not. It's definitely alarming that it's happening right now when there's holiday season coming about. But when you compare it to the larger picture, there's still a lot of employees that they have retained, and 10,000 is a very small number. Now, looking at Facebook, their number is around, I believe, 90,000 global employees, and they've laid off about 11,000. That's maybe a larger factor than Amazon, but like I mentioned earlier, the X factor here really is going to be what other industries are going through similar trends as the tech industry is, and even in the tech industry, what other smaller, medium-sized companies are going through the same kind of trends. Because right now, we're hearing news only about big companies. So it's going to be very interesting to watch closely in the next couple of months what happens, because that's really going to help us answer the question here, even though I can tell you right now that the real estate industry at this current moment has not really seen a significant drop in home prices. But if the trend continues to grow and people really start to lose jobs and at a larger scale, and they're not able to recuperate those jobs that they've lost, and they're the only breadwinner in the house, then we may have a little bit of a problem on our hands. The JOLTS report that was put out by the Labor Board of Statistics in September still showed us having job openings of about 10 million. Now, it's going to be very interesting to see what happens to that report for the month of November. And that report's not going to come out till the end of December. So all this is a lagging indicator, and we're not going to really see the effects of this until a couple of months have passed. The feds were exactly hoping for this to happen, where we had some job losses in the economy, less cash out there in people's pockets to spend, and less cash floating out there in the economy, and that is exactly what is happening right now. We may be in for a little bit of a bumpy ride. A lot of experts out there are predicting that the inflation number may come down to closer to 6% in 2023, but we are a little bit away from that number of 2% that the feds are hoping to get to. We may be 2 to 3 years out from that number, and until we get there, we may continue to see more job losses. But right now, we are yet to see a significant price drop in homes or in home values throughout the country. There are still buyers out there buying homes. If you are a buyer right now in the market or are thinking about tapping in the market, take my advice. Like always, talk to your loan officer first. Look at that mortgage payment, compare it to the rent that you're paying or the rents right now if you were to rent in today's market, and see what that number looks like. If the number is below rent or at par, it's still a great time to buy, because you can utilize these lenders that are lending money, are giving you a rate that is lower than the average rate out there, and take advantage of the market, because there's still opportunities out there to be made. I hope this video was insightful to you. Until next time, this is Karan saying.